Our speaker for the day, Mr. Ghaisas and Udayji, to please offer garland to statue of Lokmanya Tilak. Before we start, I request everyone to please stand. We have some people. I request our chairman Udayji to please get Mr. Ghaisas on the stage, please. So official good morning to everyone. And I know it's quite warm, but after you heard Mr. Ghaisas, I'm definitely sure that you will be relaxed and feel cool about it. So it's absolute honor to introduce Mr. Ghaisas today, a chartered accountant, a cost accountant. Is it clear now? Yeah? So that's better. Okay, so an honor to introduce Mr. Ghaisas today. A chartered accountant, a cost accountant, a company secretary, started his career in IT industry way back in 1987. Started with Tata's. He was the CFO and the CAF of iFlex. He scaled the business right from inception to a massive turnover of $400 million. He was the first Indian to win an award as the best CFO Asia Pacific. Mr. Ghaisas has also been the executive member of NASSCOM. He is the member of Committee of Indian Institute of Banking for System Audit, member of Internet Banking found by the Reserve Bank of India. In this current role, he is the chairman and the chief mentor of Genovel. They are into healthcare technology. He is on various boards, just to name a few: Stop, Ugar Sugar, and USV Limited. He has great passion for music and he loves playing tabla whenever he is free. We are also blessed that Mr. Ghaisas is also the Vice President of Lokmanya Seva Sangha, and his mentoring has always helped us for new ideas and initiatives. I now request Uday sir to please felicitate and welcome Mr. Ghaisas. So, before wasting much of time, I'll straight away request Mr. Ghaisas to please enlighten us.
Can you hear me? Is it okay? Hello. Yeah. Good morning. And first of all, my hearty greetings to all of you on Easter Sunday. The subject that we have chosen today is on SVB, which funnily so was announced in India that we are not SVB the same as what it was, because many people thought that Shamrao Vittal Bank was known as SVB, and suddenly they started getting people at the branches to withdraw money. So they had to announce that. So that is the first effect we saw of SVB in India, that some people thought this Shamrao Vittal Bank is in problem. Now the topic that we have got today is, it is a catastrophe or apocalypse. Now Mr. Dere firstly asked me, the moment he saw that topic, he asked me what is the difference between two terms. And I gave him the explanation, but till morning he was not happy with that, but I spoke to him today again. So now it looks like you are happy. So first is an instance where something goes wrong. And the second term talks about the cascading effect of that, which can destroy the world. That is what is talked about in Bible. And being a Easter Sunday, I thought we should refer to Bible terminology. So this question has come up in the minds of many people, that is it the beginning of end of certain economic disciplines that world saw? And all of us are aware that banking is such an important function in any economy. It is almost like an heart, where heart keeps on pumping blood. The bank and banking institutions keep on pumping money into the entire body of economy. And if something goes wrong, it should be taken as seriously as a cardiac problem. And that can be not only catastrophic, but it can be finishing the whole thing. Now, this is not the first time that the world has seen this. In the United States, it happened as recently as 2008, when we saw this Washington-based company going bankrupt, and then all of us have seen what happened to the sub-market. People thought that the... Pankha chalu over there? Or this is the way it runs? Okay, we'll. So, the banking and economy are so close, and I can assure you, in the world, the banking is the second largest regulated industry after civil aviation. And I was lucky to see the banking industry around the world almost for 25 years in 138 countries, where the banking is run differently, but the regulations from the government or the ministry or the central bank are so seemingly tight that government wants to understand, know every movement that happens in the banking. And especially when world started facing the problems on narcotics and on terrorism, one of the key things for these activities, anti-social activities, anti-country activities, were there to cut off their financial lines. And therefore, every account is being scrutinized. The suspicious transactions are reported. And that goes without exception in every country. Point is, when such an industry which is regulated so heavily, how something can go wrong? I mean, that's a question that common person would get. Well, ultimately what banking does is takes money from all of us, gives us some interest, and then lends it to somebody, charges higher interest, and gets the difference between two interest paid and interest received as their income. That is a simple business that happens. But mainly what happens actually is bank tries to sell the trust. All of us put our money into bank, our own hard-earned money, because we trust that bank. And that's why when the cyber security problem started coming up and the bank accounts started getting hacked worldwide, in first 10 years of this situation, only 2 banks reported, one of them was Citibank, so I know about it, that their website was hacked and money was stolen. And why only 2 banks? Because all others believed or were afraid that if they report such an event, the trust of society of the people will be lost and the money will be withdrawn immediately from the banks. So point is, they are also trying to preserve that trust or respect that trust so much that they want to ensure that there is nothing goes wrong. Who all controls them? Firstly, obviously the central ministry or the finance ministry. They have certain regulations, certain observations. Then central bank of every country, in United States is Federal Reserve, in India it is Reserve Bank of India. All of them control it. And then you have got organizations like IMF, for example, when you want to borrow money from IMF, International Monetary Fund, or World Bank, they also do have certain restrictions or regulations imposed in addition. And today, the problem with Sri Lanka and Pakistan, if you see nations which are preventing the money to flow in those countries. Because country per se, which is sovereign power, doesn't want to accept certain conditions because they are not as per their norms. So banking is regulated heavily. And they're selling the trust. And therefore, the risk management is one of the major functions in bank. And in risk management, when we see risk, I can assure you there are at least 45 types of risks that any board of a bank constantly evaluates in its board meetings, in its business reviews and so on, to ensure, this is good. तो बंद केला चालेल तो आवाज येतो सर So the risk management is something which is so important to a bank that without that function, probably no central bank allows any banking or NBFC to function. Now, 2008, when that collapse happened in American banking system, there was a law which was brought in. I mean, because most of the politicians in most of the countries believe that moment some catastrophe happens, their job is to bring another law to ensure that the public opinion has been taken care of. No one worries after that how that law is imposed, regulated, and how seriously it is taken. I mean, you can see in any disaster that happens in any country, the first thing government does is brings another law, without realizing that there were already plenty of laws available. The problem is that it was not enforced properly. And with that, all the banking institutions in the United States were subjected to that law, which was quite heavy reporting, very tight risk management. And when the risk management and compliance becomes a major function, the growth of a bank is always comes under shadow. And that's where the leadership of the bank starts wondering, do I engage in compliance first or should I engage in the business growth first? Because all my stakeholders, especially my shareholders, want the growth to happen. And almost it is like an alternate that either you do compliance or you do growth. Both can't be achieved. That is something which is, and that is true not only for banking, that is true for most of the other businesses. I mean, quality and growth is another area, especially in IT industry. When we impose quality controls, suddenly the marketing guys will come and say, do you want a customer or you want a quality? Because something has to be delivered to the customer in time is more important than the testing of the software and complying with the quality standards. And as the CEO of a company, you always face these kind of dilemma and the question on day-to-day life. Of course, you can't toss the coin and say, today we'll go for the quality, tomorrow we'll go for compliance, and then we'll look at the customer. We can't do that. We have to keep the balance. But amongst the various risks that we envisage in banking, the credit risk is something which is the most important thing, because bank's business is to lend money. And when you are lending money, the credit risk becomes too high at times, because when the proposal comes for the loan, even a great professional, experienced professional applies his or her mind, there is always a chance that there might be an issue that will come up and the loan can go bad. Howsoever care you take, howsoever SOPs you apply, the formats that you apply, the templates that you apply, So credit risk is something which is most important. And many banks, if you see, the examples very close to us is CKB Bank, where the credit risk was so high that at some point of time the loan stopped coming, the loan repayment stopped coming, and the bank went bad. The same thing probably happened to United Western, same thing happened to many other banks in the world. So credit risk is something which is the most important risk that banks look at. Now why they cross it? Because many a times, especially in India, I would say about the cooperative banks, that the kind of board that controls it, the kind of people who control it, may have more motives than the pure credit giving. There can be a nepotism, there can be a political issue, there can be a social issue, and so on. So many times loans are given without proper scrutiny or knowing that this is not going to be a good loan. Yesterday, Uday and I, both of us talked on Mudra, because yesterday Mudra completed 8 years. So we were on the radio channel talking about Mudra. 40 crore people have taken loan of some 23 lakh crores in India, and right from 50,000 to 10 lakh rupees. The data I was trying to look for on Google, that how much of this loan has been repaid, unfortunately I could not see any data on that. So it is good news that 40 crore people could take that money. NPA, reported NPA is 3.3. Let's look at that way. Because banking accounting is again a chapter to be discussed. Unfortunately, Mr. Chitra is not here, but my friends in Chartered Accountants Auditors are here. Because normally NPA is netted off with the revenue, and almost it is hidden in accounts of the banking. And that is perfectly accepted principle. Is that right? So when we say, that's why the moment he said 3.2% NPA, I said that is reported NPA. Right? And all of us understand what you mean by reported and actual NPA. But I don't believe that out of 40 crores Indians, 37 crores are repaying that loan. Because many of these loans are given as a political favor, as a social favor. And when that system was launched, my main worry was not how people will get money, but my worry was how much of that money will actually come back. Because 23 lakh crore is your and my money, which is given to all kind of people. So point is a credit risk. And most of the banks fail because of credit risk. The uniqueness of SVB, which is Silicon Valley Bank, is that it did not collapse because of credit risk. It got collapsed because of market risk. And I'll explain to you what market risk is. Because when they take money from us, they can't keep that money with them. So they have to invest that money, at least till the time the people are withdrawing it. Now, if that is the case, they take certain market risk to invest that money, assuming that whenever they need that money, they can get it back from the investment, that liquidate the money and service the customers. So basically it is money is taken either from depositors or from other investors. Out of that, some money is lent, some money is kept as an investment. And of course, government puts the CRR and the terms that you must have used, that cash reserve ratio and liquidity ratio. Those ratios are you have to keep it, and the rest of the money you can make money out of it. Now, SVB's lending decisions were not wrong. Their market risk was high. Did they know about it? I think yes, they knew about it. Everyone knew about it. And I can assure you, today, of course, everybody will be looking at the balance sheet in a different way. But many of the banks must have gone through this route. Like when Enron happens, Enron was not the only company that happened. When Satyam happened, Satyam was the only company that happened. They got caught. That was a problem. And that's why I said, is it going to be beginning of end? Because if you have a closer look at the balance sheets of the banks, you will realize this problem exists in many other places. Not only in US, in the world. Apparently it looks good, but when you start dissecting the things, you realize this is not good. Okay? Now let us look at who was SVB. Now I have to say, unfortunately, who was SVB. Right? I mean, SVB was my customer, so we have interacted with them before. It's a typical Silicon Valley bank, started in 1983 by two people. One was from Wells Fargo and another was a professor from Stanford. So nice people started this bank as a community bank. I mean, what we call community bank is similar to cooperative bank that we have here. And I can tell you there are 30,000 community banks in US. It's a huge network of community banks. But of course, they had great ambitions, so they didn't want to remain a community bank in Santa Clara. They wanted to become bigger. So they initially started concentrating on real estate, property funding, like what HDFC does or what many banks do in housing development or property developments. 1985, they reported loss of $39,000. But from that, by 1991, they started reporting profit of around $1.2 million. So they thought they were doing the right things. But unfortunately, in California, the properties collapsed in mid-90s and late 90s. And they got a setback. They started getting into trouble. So this is not SVB's first trouble. This was so they shifted their focus from properties to wine financing. You guys know that California is known for the wines and a huge industry of winery. So they started funding wines. But then realized the growth is not so much because growth is limited. American wines are not in any way known very much other than the United States itself. The French wine everyone knows. I'm happy that Indian wines have started getting popular now. But there are Australian wines, there are Chilean wines, there are other European wines and so on. So American wines are not something which will grow dramatically. And bank looks for an industry which is growing dramatically. And that is the time, by 95, 96, they started looking at high-tech companies, because that was the time when the startup era had started in California. 97 was the first year when a term startup was coined in one of the Forbes or in Economist or some other magazine. So the first time startup term was coined. And then they realized probably this is a good idea to be in a sector where you start funding the deep tech, high tech startups in California and the Bay Area. And that's how probably the name of Silicon Valley Bank became more relevant. Because all of us know this as Silicon Valley. But by 99, 2000, they again suffered a setback because all of us remember, at least people in front, probably people in back won't remember this, that there was a dot-com bust. So all dot-com companies suddenly went haywire. And many Indian youngsters, technologists who had gone there in California, who had ESOP or stock options, and the way in which taxation system at that time in US was going, they had to pay taxes without realizing cash. So they actually borrowed money thinking that my stock will go up and I will sell subsequently. They borrowed money and paid for the stock options. And 99, 2000, the dot-com busted and most of these people went bankrupt. And so does SVB suffered a loss. So this was their second shock. But then they started looking at the startup not as a dot-com, but more as a deep tech. Because remember, dot-com is more of a marketplace. And deep tech is some innovation that happens which takes care of some problems of the society, of the world, and so on. Who were their initial customers? if I give just one name, you will understand what I'm talking about. Cisco was their customer. Cisco first banker was SVB. So this is what the journey they saw of the startups. I mean, Cisco is a classic example from a small startup company to what it is today. So that's how they started building on their clientele with startups. By 2015, 65% of startups of Bay Area were banking with SVB. And that's a huge market share. And then they realized it is not only banks, not only startups, but they also need to talk to venture capitalists, because that was the community of venture capitalists came in picture. I don't know how many of you have visited Bay Area, like Redwood Shore where the Oracle is, or San Jose, and road between San Jose and Redwood Shore, or between San Francisco and that area. There is a huge area called Sanders Hill, which is supposed to be the community of venture capitalists. And I think you must visit that area, because each house is of almost like a couple of acres. And all these people are people who made their money in life from the startups. So they sold, they were serial entrepreneurs and so on and so forth. I remember visiting one of the cafes there. And this is where Stanford University is. This is the area where Stanford University is. That cafe is known for startups and VCs coming together. So most of the tables in that cafe, I could see white-haired people on one side and young guys on the other side, explaining their venture to the venture capitalist, and venture capitalists agreeing to cut the check. In that cafe, I saw one frame, and there was a wallet put in that frame. So if you go over there, please have a look at it. So I asked actually the owner what that wallet is doing there. It is George Soros' wallet. Because he also used to visit that, probably he still visits that. And once when he struck a great deal and the bill came, he just put the wallet and said, take it all. So instead of taking the money out of it, this guy has put that wallet open, framed it, and kept it. Point I'm making is that this is the kind of money that flows in that region, which you and me can't even imagine. Larry Ellison stays in the same area, Raj Khosla stays, I mean, there are a lot of Indians there. And that is a matter of pride for all of us. There are a lot of Indians who have successfully become rich, and they are in the business of funding now. So those are all venture capitalists. So those all people they started talking to. And with them, then SVB started 7 other subsidiaries. And one of them obviously was private banking, because all these VCs would put their money and they don't know how to deal with that money. So these guys can help and get a lot of assets under management. So by 2021, the revenues of SVB were $6 billion, with a profit of around 1.77 billion. And that makes a big size. And the total asset size was $211 billion. So obviously that bank was not a small bank, a community bank anymore. It was a big bank. But probably that itself became a reason of what happened subsequently. These are the numbers I'm talking about, 2021. Now let's come to, if such a big bank, and this is a kind of progress that they made, with 3 CEOs running one after other successfully, what happened suddenly? Now what happened suddenly was the kind of deposits you must understand they got. 2019, the deposit base was $61 billion. 2020, suddenly they saw between 19 and 20 a deposit increase of $40 billion. So it became $101 billion. That is by 2020. And by 2021, it became $200 billion. So $40 billion increase in 1 year and almost $90 billion increase in next year. Where this money came from? If you remember, that is a COVID period. Now, COVID period, most of the deep startups didn't have to worry about the market because obviously nothing was getting sold. So they took this as an opportunity and started concentrating more on R&D, research and development. Because that is where their innovation will put into use and it will be marketed subsequently when the pandemic goes. That is the theorem. The VCs also did not know where to put the money other than this. So they started funding very liberally, maybe in the same cafe I talked about, to all these ventures. An number of ventures that came up were too many with too much of money. All that money came to SVB. Now what was the deposit term? Deposit term was on demand. So whatever money you put as a deposit, I will pay you whenever you ask for. That is the demand deposit. What is the interest rate given? 0. No interest because Fed rate that time was a 0.25. So nobody expected. I think in India we are very used to getting FD rates. I mean, even if you get 6%, you feel somebody cheating you. But that's the kind of inflation that we run with. But if you go to Japan, probably there is a negative interest rate that you put the money in bank, you have to pay for that. Like I remember one of my friends who went to US first, and you know that US Today and all those newspapers that come are quite thick. Why? Very bulky. And as a typical Maharashtrian guy, he had to buy a paper every morning. I mean, that is almost a compulsion without reading it. Because you can't complete that US Today any day. After a month, he realized there's a huge raddi piled up. So he called another friend of his who was there for ages in US. He said, who will pick this raddi? So he said, call this number and he will come and pick up. So this guy came and weighed the raddi and some 30 kilos. So this guy asked, how much? So he says, $40, sir. Give. He said, no, you have to pay me. In Japan, to pay deposit, you have to pay them. So SVB deposits were 0%. And this is a key factor. Why I'm saying this? Because this is a very key factor of how the debacle started. Now what SVB management thought, that if they put that money in government bonds, government securities, it is the safest. Unfortunately, their chief risk officer had resigned, and next 6 months they forgot or didn't care to appoint another risk officer. Now, unfortunately, the kind of situation today they are, it has been noticed that 6 months they didn't have a chief risk officer. But the philosophy that went, that we will put that money in the government securities, and all of you know, because you're literate in investment, that short-term deposit, short-term government tenures, security tenure always fetches you lesser interest, and long-term fetches you higher interest. So they thought that they should do that. And instead of getting 0.5% return on short-term government securities, we should get 2.5% or 2% interest on long-term government securities. So they all went into 10, 11, 12, 15 years deposits. Now that is a time when Fed, economists in the world were sort of giving signals that post-COVID things will come back to all right, inflation will be controlled, interest rates will remain in check, so economy, don't worry. If that is the signal you are getting from Fed and from economists in the world, your investment strategy is based on that assumption. So assumption was interest rates will not go up. I will put in long term, make some more money, 1.5% more, and 1.5% more on some $200 billion, you can imagine, is a big money for the bottom line. So they said we will do this. And then it so happened that during 21, the Fed rate, which was 0.25, and Fed signals were that the economy is under control, suddenly the Fed started realizing that the inflation was not getting controlled, and especially post-COVID. So they started increasing the interest rate at a much faster rate than anybody expected. And by December, that 0.5% rate came to 4.25, 4.75. Now this rise was too much and too quick. Now what happened? Now when the interest rates go up, the yields go up, and therefore the value of the bonds come down, especially long-term bonds. So bond which was worth $100 suddenly started looking like $98, $97, $96, $94. Now what accounting norms say? That you have to mark to market. I mean, that is a basic concept. Moment your investments go down, you have to mark to market and therefore book the losses in your P&L account. But last time also I had told you that accounting is an art, right? So there is a small way out. That if you hold the securities not with the intention to sell, then you don't have to mark to market, but there is something called STM, hold till maturity. I mean, these are all American terms. So you can keep everything under STM, hold till maturity, but you can't sell those securities. So when you put in STM, assumption is that 4.25% rate will slowly start coming down, and again the bond values will start getting up. So I don't have to, probably after 10 years when I actually mature this bond or security, and especially it is a government security, so it is not going to go bad anyway. But by the time I actually realize or liquidate that security, the value I will get is the same or more than what it is today. So SVB started applying hold till maturity concept. So not a single penny was written off on that $200 billion in your P&L, and they kept on showing profits. Based on that, their executives got their bonuses. Investors were happy, share price was going up because they were showing the good numbers. Again, as I said, they were not making good numbers, they were showing good numbers. And that's where again, Chitra is not here, but otherwise I'll re-insist that accounting, therefore I say, is an art. Mr. Derry, you agree with that? He will not agree. His profession is this. He is bound by his profession. And then it so happened that in January 23rd, there is a company called Ragging Cap Venture, RCV. It is a Silicon-based company, Silicon Valley-based company. Oh, okay. Before that, Q3 numbers came. JP Morgan and people like JP Morgan analysts and so on, all of them said, this is a great, hold, overweight. I mean, those kind of signals that came, because that's how the balance sheet was looking. So all investors were very happy. Depositors were keeping more money into the bank. The VCs were putting their extra money into the bank. And while all this was happening, on 10 Jan 23, RCB came out with a tweet, not a report. They tweeted, because some smart guy there took the balance sheet and he started putting those numbers under mark to market. And he suddenly realized that if I put all the investment or SVB today on 10th of Jan to market, my total losses are $15.9 billion, while their equity capital base was $11.6 billion. So what he tweeted, if SVB marks to market all its investment, their equity capital is wiped out. What RCB did? First thing RCB did, like what Hindenburg did, they went short on SVB. And I can assure you they made a lot of money. But this is not like Hindenburg report. They did not accuse, thank you. They did not accuse anybody of malpractices, nothing. They just tweeted one line, that if SVB marks to market all its investments, their equity capital is wiped out. And the numbers we are talking about is like $15.6 billion to $12.9 billion. That tweet suddenly became viral. And the depositors and the startup companies and the VCs started realizing that there is something fishy. It's stinking. Maybe put under carpet, but it is stinking. So why take trouble? So they started lining up between Jan and Feb to the bank. First they stopped depositing more money and they started withdrawing it. The thing came in month of March is that in 48 hours, $42 billion were withdrawn. And $16 billion in one day. Now, frankly speaking, any bank in the world, if more than 20% depositors line up in 24 hours to withdraw, the bank will collapse. Because your CRR is 20%. So no bank in the world can survive. It can be ICICI Bank, it can be Citibank, it can be anybody. That if more than 20% depositors come to withdraw money in 24 hours or 48 hours, the bank will collapse. And exactly same thing happened to SVB. But they were sure because their asset base was $200 billion. So why worry about it? So they started repaying the money. But in the process, they had to sell these long-term bonds. The moment they sold long-term bonds, their hold to maturity principle cannot be applied. And suddenly they realized that they have to take a huge loss in their balance sheet. The way in which they played is they made the baskets of that long-term bonds and took one basket at a time. So not MTM was applied to the entire investment, it was applied to the basket which was, like we have got cluster deposits in banks, if you write a check, they will withdraw 10 lakh rupees from you, from the deposits and satisfy, then another 10 lakhs and so on. So they played that game, or tried that game, thinking that the customers will be happy and go back. So somebody has said that this is the first bank which collapsed because of Twitter. With the social media thing was so bad that the tweet of RCB became so viral that everybody started worrying about it. It happens in India also. Dr. Vaidya sometimes call me and ask me whether a particular bank is okay, can I put a deposit? Well, all of us are worried because ultimately it's a trust. Right? Somebody hears news somewhere, and now with the social media, I think the things get viral very quickly, and especially the rumors. And you don't know which is a fake news. And frankly speaking, when you've got alternate banks, you don't even care whether it's a fake news or not. The moment there is suspicion, you take it out. And the same thing happened constantly. And by 10th of March, the bank realized that they cannot satisfy their customers anymore. So they said, we are closing the bank. Now with $42 billion gone, huge losses recorded now because from STM you got to mark-to-market. Bank had no other choice but to close it. And suddenly world woke up that, oh my God, what's happening? Unfortunately, at the same time or similar time, two other banks which collapsed in the US. One is a bank called Signature Bank. Now, Signature Bank's story is a little different. They also had a problem, but the problem was their entire asset base was based on cryptocurrency. Now, somebody in their wiseness thought that cryptocurrency will ultimately gain. I don't know how many of you are invested in cryptocurrency, but world is greedy, so they thought that they can put in cryptocurrency. But remember, cryptocurrency came because people stopped trusting banks. See, cryptocurrency is blockchain, it doesn't require a bank. So cryptocurrency came because they don't want banks to come. Now, how a bank can rely on the same asset which is trying to avoid banks? But Signature Bank got into it and obviously got collapsed. And then there was the First Republic Bank, which again had its own problems. It collapsed. Point is, that is where it started looking at, it is just a one instance or it is the beginning of end. And while you are talking that, suddenly you get from Europe, Credit Suisse as a problem. In India, we have already experienced Yes Bank gone. Russian wars, China not responding. And that is where the entire financial sector thought that there is a problem. What happened in India? Obviously, the share prices came down, market came down by, what, 10 lakh crore rupees? Some 2,400 points. Suddenly, 10 lakh crore rupees vanished from Indian market. Why? Because some SVB bank in the United States collapsed. But it was not one SVB bank. It was three more banks and then Credit Suisse news and the financial sector news, inflation rates, interest rates. All that created huge problem. And that's where apocalypse comes. Is that true? Or it is just a catastrophe localized? If you ask me the answer, I still don't know. Because it's very difficult to read the balance sheets of the banks. And as a chartered accountant, I can assure you that it is difficult. Now, what happened therefore after the collapse? There are some 30,000 startups who have deposited their monies. There are VCs who have deposited their money in SVB. And I can assure you on 10th of March, my elder son has his own startup and is funded by Y Combinators. Y Combinator is a sponsor of SVB. So all funding that goes to Y Combinators, their preferred banker is SVB. So all these monies that go through Y Combinator ends up at SVB. And suddenly they realize whether they can even pay the payroll of their people on Monday. But many of them pay weekly basis. Because you have no cash. And all of us know that we, Americans especially, don't even carry $100 bill. They probably have a couple of dollars here and there. And otherwise they use card. And everyone has got SVB card, everyone has cash deposited in SVB. And suddenly the bank stops. The weekend was very bad for all startups. So in India, some of them, I think there are 60 startups who are who had deposited their money, and probably 24 out of them had more than $1 million. Now, like in India, America also has a system whereby your deposits in banks are insured if they are less than $250,000. But these high-tech companies, young crowd, 97% of deposits in SVB were not insured. Where bank will go? I mean, bank making such a great profit, why will something will go wrong? That was the question. So why spend money on insurance premium? Cost cutting. So suddenly that happened. Startups came in trouble. And then American government regulators got into it. Good news is, whatever they did, they ensured that on Monday banks open again, on 12th of March. And that's the assurance they gave on Sunday, but I'm sure still many of them lost their sleep because you don't know how much to believe what government says and whether Monday actually bank will open and whether I can withdraw the money I want. But they started. And another thing that they did, that even though your deposit is not insured, it will be considered as insured. So you'll pay back up to $250,000 will be paid back to you. I think that was an attempt from US regulators to ensure that the trust comes back in American banking system. And especially with the backdrop of Signature Bank and the First Bank, I think the regulators were also worried that how to gain that economic interest back or the confidence back into the banking system. Now again, when I say why it is not just one incident, because a lot of thoughts come into my mind. I'm going to put that in front of you in next 15 minutes, and then we'll get for question answers. I mean, all these Western pundits, they take a dig at India or emerging markets, that whenever bank has in trouble, the government supports it. We have seen that. Last many years, whenever the nationalized bank had a problem with NPAs, government kept on putting money. Now that is not a best economic practice. And one side you are saying it is a capitalist way, it is not a nationalized bank, it should not be like that, and so on. But whenever the bank comes in trouble, you try to save the institution and you keep on pouring the money, which is your and my money. So Western countries, especially American pundits, Pandit is not Mr. Pandit, the experts. So they suddenly realized that the same criticism what they were doing for developing world is now haunting them. Because this First Bank, when it collapsed, they asked at least 12 banks or dozen of banks to put their own money into the First Bank to make it survive. And the banks did it. Same thing they did with SVB. Credit Suisse is sold to a competitor for a negligible price. SVB UK was sold for £1. Now, problem is it a consolidation happening somewhere or it is a collapse happening everywhere? Because after 2008, when 2008 collapse happened, American government had promised people of United States that they will never use again taxpayers' money to revive financial institutions in this country. They will ensure that act will be such that it will control everything. And there is some act called Dodd-Frank Act. The Dodd-Frank Act was introduced in 2008 to ensure that 2008 kind of a collapse never ever happens again in US. Now for whatever political reasons, 2017, when Donald Trump was a president, maybe social reasons, maybe political reasons, he had excluded smaller banks or medium-scale banks from this act. And therefore, now I'm not saying therefore because of that the collapse happened. But point is that because of that, the seriousness about the risk management probably for the middle-level bank were not taken seriously. Now I'm on the board of Citibank and I know exactly how much we worry about compliance and Fed and RBI and so on. I think half of our time on board goes on their comments to ensure that we are not on the wrong side, we are doing the right things, right time, all the time. And that is where compliance versus growth combination comes, the balance comes. But I think somewhere my feeling is that the leadership lost their focus. And then what we talk about is the corporate governance. Corporate governance is something I think had taken a back seat. We all talk about ethical standards, and I think last time also I had said that we considered ethical standards to be flexible. Like when we say the related party transaction, there should be arm's length relation. But you don't know how long and short the arm is. So flexible standards become a standard. Chalta hai attitude gets more in the leadership. Why? Because they want to achieve their top line. And I remember famous words that top line is a vanity and bottom line is a sanity. But again, when I say bottom line, it is again there MTM versus HTM, you know that profit is an opinion. It's not a reality. It's a contingencies, there are a lot of discussions that come into it. And therefore again I come back to say accounting is an art. Now this art has been taken to a farthest extent. But prima facie when you see, when investment of a bank are in GSEC, there should not be a problem. It was very close to all its stakeholders. Their focus on startup was so much that you won't believe it. But in Bay Area, SVB branches used to celebrate Holi and Diwali because most of their customers were Indians. So was the management sensitive about? I think they were sensitive about the stakeholders. Unfortunately, they never thought that they were doing something wrong. What they forgot probably is to keep the watch, and that is the job of the risk officer. That what RCB did of calculating mark to market to all the securities, somebody in the banks started doing it right in the beginning. That what happens if mark to market, then what is my loss? Now whether you bring that in the books or not is your choice. But when it starts reaching a quantum of your equity capital, then I think there is some signal. So my belief is that leadership lost the focus and growth at any cost is the motto that they picked up. And again, it is not only SVB, that's why I said there are many banks who did it or were doing it. If they don't learn from this, then probably there will be a jagbudi. There will be disaster everywhere. Second point is regulators. I think none of these catastrophes that happen any time, I have never heard that regulators were held responsible at any point of time. I think they should take the blame also. But they almost have simultaneous audit. They are sitting next to me all the time as a banker. They tell me what to do, they put the regulations, they put the reportings. But when something goes wrong, no country, no regulator takes the blame on itself. And the auditors. Now I remember last time when we heard about Hindenburg, one of the objections Hindenburg had that, Adani had a very small auditor. Who was auditing SVB? KPMG. How long? From 1994 to 2023. All these years, their auditors were KPMG. And ironically, all three banks who collapsed in US, all three banks had auditor of KPMG. And Credit Suisse at PwC. So people must understand that, oh, suddenly it's better. So people must understand that this is not the size of the firm of the auditor. But I think that auditors need to be rotated is one of the safety measures that we have in India. I don't know whether it is there in US. Obviously it doesn't, because 94 to 23 is not something, even First Bank and Sign Bank, KPMG is auditor for 22 years. Why they are not held responsible? In India, we have also seen Satyam se leke, no audit firm is responsible. We rely on auditors' report. We believe that is a big four, big five, big six, whatever they are. It must be right. And we can't believe that none of them understood what it is. Right? But there also the probably business versus profession conflict comes. Next is rating agencies. We all rely on rating agencies, right? I'm like, Enron was the best investment till the day they collapsed. What the rating agencies were doing? In case of SVB, now India, especially opposition, talks more about Moody's rating. Now Moody's rating of SVB was A3. Till what date? 8th of March. They had no clue what is happening in SVB. Are they only responsible? No. S&P, again renowned rating agency, the rating was BBB, which is 9th in the rank, from bottom, quite high. And that means good for investment. BBB is a good for investment. Till 23 March. My fear is, if this is what the auditors and regulators and rating agencies are doing, the cascading effect of what is happening is not far. Because all your checks and balances are not working. The trust that we keep in bank is not only in the bank management, but because they have auditors, they have regulators, they have rating agencies, all of them are telling about the bank to us. But if they don't understand, and especially rating agencies, I think in US now there is a huge talk going on that rating agencies have to be certified by SEC. And they are asking why. Let anyone and everyone start doing rating and let people worry about it. Because if there is no competition, suddenly 2 or 3 rating agencies become monopoly. And then they keep on employing the old techniques of rating, and they end up in the apparently wrong rating. Or I would say non-reliable rating. So I'm not talking about SVB collapse. I'm talking about the auditor's problem. I'm talking about the rating agency problem. I'm talking about the regulator's responsibilities. If all that is happening in this world, I have a big problem. And that is where I say apocalypse might come. I'm not a pessimistic guy, I'm a very optimistic guy. People are wise, the governments are wise, professionals are wise. My hope is that they will rectify it. My fear is exactly same thing happened in 2008 and is happening in 23 again. So we have not learned much between 8 and 23. And we allow things to happen the way in which they are. Probably to get more bonuses, top lines, business, flexible ethical standards, and so on and so forth. And especially when economies are not doing so well, I think these kind of shocks do not allow the economies to stand for long. That is my fear. What I liked about it, the way in which American regulators responded to it. 10th of March, it happened on Friday, Monday, bank opened. Now look at Yes Bank, for example. Yes Bank took 2 weeks. And unfortunately, in Yes Bank case, even after 2 years, the things are still in court because that 81 bonds were written off first before equity capital. Now when I buy 81 bonds, I buy bonds thinking that first equity and then tier 1 bonds. 81 is tier 1 bonds, A types. So they are less risky than equity. And that's how now 81 bondholders have gone to the court saying that you guys cheated us. Both RBI and the bank cheated us because representation made in the bond offering document was different than one actually it's done. And the courts are looking into it, but again it's judicial system that will take time to decide. Point is that recovery of that collapse is still not complete. To my surprise, when this 163 years Credit Suisse Bank collapsed last week, even European governments have applied the same logic of cancelling 81 bonds first before equity. And I wonder why. I have not studied that fully, the balance sheet. But I think there is some problem because somebody is trying to save the equity shareholders. And we have seen that happening in 2008 in case of Goldman Sachs. Why Goldman Sachs was not allowed to collapse? It's because somebody had more interest in the equity capital of equity shares of Goldman Sachs. So why 81 bonds? I mean, all of us invest in bonds thinking that they're safe, and then you write off those bonds before, I think is a problem. Being in technology and especially in banking technology, please remember one thing. We don't need banks. We need banking. And the way in which technology is going, I'm sure you guys have heard all the blockchain technology. Now if the blockchain really comes the way in which it is envisaged, I can assure you we don't require banks. But what banks do, they make money on our money and sometimes forget to give it back to us because of their own problems. Why I should put that money there? So blockchain will actually replace banks. My fear is if these kind of things keep on happening in the banking system, then one day the blockchain will actually take over the entire banking. Now I can have a separate debate on blockchains. It is still probably distant future. But if these kind of things happen, I think blockchain replacement will come faster than what we imagine today. So at the end, I will say that now, banks have, Indian banks especially, and probably foreign banks also have the habit of keeping good relation with stakeholders. You get suddenly a birthday message saying that stay healthy and stay safe. I will definitely this time send it back saying that you too. Because I think it's very important that they remain healthy and stay safe, because otherwise all of us have problems. So thank you very much. I stop here and go for the questions.
So I'll ask the first question.
Sure.
Do you really think Indian bank after the insolvency code and the entire thing which happened in India?
See, again, it all depends on what you call safe. Okay? Banking or any business is a risky business. Without risk, there is no business. Okay? And that is where the risk management concept comes. So, problem comes when you start getting surprises. Okay? Now, no management is good management if they keep on getting surprised, either negatively or positively. So when my salesman suddenly comes and says, this quarter my revenues have gone up by 100%, I said, why didn't you project? He said, even I didn't know. So I have a problem. I'm not happy with that 100% increase in sale, but why he did not know, that means this is a windfall. Okay? So, if it's a business, it is not safe. If the risk is managed well, then it is safe. Right? But we have seen in Indian banking, right from ICICI to Axis Bank to Yes Bank, and I'm not even going to talk about Maharashtra Punjab Bank and CKB Bank and all that, Pain Cooperative Bank and so on. I think Tirak Mandir we know Pain Cooperative Bank better. So, nothing is safe. We as a customer, we as a stakeholder have to keep a constant watch. My problem is, therefore we rely, all of us are not experts. So we rely on auditors, we rely on rating agencies, we rely on RBI. If they fail, I think they are not safe. If they continue to do what they want to do or they need to do, then I think we are safe. That is where. Yes. Sorry. I think, why don't you come here and I'll tell you why, because the recording doesn't otherwise record your question.
On the same note of collapse and aftermath and recovery, we have to look into our Indian prospect that we had debacle of ILFS. Later on, all the bankings were shuffling here and there. Then there was a suddenly huge growth of ARC companies. Most corporates have come into the ARC without there being any banking or any kind of financial institutions exposure. And maybe I think large companies, So looking at this SVB, then regulation, rating, of course we are hugely debating on rating in India also. What are your views? What will happen with these huge capital NPA which are written off and labeled with different things?
Thank you. I think one thing, if you have noticed, in all these collapses around the world, especially in the United States, in the name of saving the institution, because institutions are sometimes so large, so huge, that economy or country cannot afford to make them collapse. But in that shelter, I think the individuals are also saved. You have never seen any CEO, any banker going behind jail, not even tried in the court of law. They all have taken their bonuses in the past years. Collapse happens, they just vanish, or they go off. At least recover their past bonuses that they have taken, if nothing else. But India, that way, I would say, we are a little better off. At least few of the bankers are behind bar. I'm not happy about it. But that probably should give the right message to the other bankers. I can tell you, after certain instances, since you talked about IIFL, couple of auditors went behind bar. And then the number of boards that I am on, I have seen a complete change attitude and approach of all other auditors. Because now that fear of going back behind the bars is there in mind. I think that makes a difference. In America, that is not happening so far. One Gupta went behind bars, maybe because he was Indian, and the other was Sri Lankan. It was insider trading case, but it was an economic offense. But no bank collapse, nobody has been tried or gone behind bars. And this is all because they wanted to save the institution. But fear is that they were trying to save the individuals, and therefore there is no fear of law. That is my way of looking at it. But India, I think we are much better off than doing that.
There is a book, Bin Counters. You must have Bin Counters. It was written sometime in 2010. It shows all the connections between big fours, government, regulators and all that. So does it mean that in spite of that book, none of these persons really want to take any action and therefore, they don't mind jagbudi. At the same time, So long as they become rich in the process, it's fine, let the common man die.
Yeah, I mean, I won't be so harsh on it, but the intentions are to make it smoother. But as I said, when you have to balance between business and profession, and that happens to not only chartered accountants, it happens to doctors, it happens to lawyers, it happens to every professional man or lady, how to balance between business and profession. And I think that's why I said corporate governance is something, I mean, this is a part of governance, basically, right? And governance is something, I mean, I got a little different opinion on governance, that, see, all laws in the world say what is wrong. It never says what is right. It says this is wrong under this act, and if you do this wrong, this is the punishment, and how it will be administered, how the law will be managed. That is all every law in the world talks about. It never says what is right. Now, corporate governance is first time law has started or tried to tell what is right. Now, independent director, they have put some 32 criteria. Are you going to be still independent director after passing 32 criteria? No, it is a state of mind. You have to be independent in mind. Right from beginning of the humanity, what is right has always been told by the religion and with the fear of God. Law has never managed to tell you what is right. Now, this is something we are trying to do now. Okay, it is going to take time. Okay, but I'm not talking about only the putting people behind bar is going to work. Okay, but I think this is the value system which needs to come, and I'm glad that these youngsters have come today behind, and I was insisting that we should get them, because they should understand what is wrong. But once you understand what is wrong, then it is easy to say what is right. But if you don't know what is right and wrong, and that is what bin counter talks about, right, then you will never reach the right thing. Yeah?
Good afternoon, sir. And this question I'm asking to you on behalf of some of my students who are here. Sir, where do you see our Indian economy going over next 5 years, especially in the context of Russia, Ukraine, and China type, Taiwan likely to happen, and US-China tensions, and the Adani thing happening in our own country? So where do you see economy and eventually the financial markets will go over next 5 years period?
Sure.
Thank you, sir.
Thanks. I think I'm an optimistic guy. And I feel between China and Russia and Ukraine and what is happening in US economy, the only country which is going to get tremendously benefited is India. Okay, we have already started seeing there's a huge increase in manufacturing. China +1, Europe +1, they're all looking at India. Of course, in past 1 year, the financial institution took out almost like $20 billion out of this market. And the PE funds which were supposed to be funding $20 billion haven't come. So overall we are $40 billion negative on inflow as the economy. And today, if you might have read in the newspaper that reserves have gone down little. But I'm not worried about that. Problem is the confidence of the investors outside country. There is a huge confidence now getting built. Maybe because of political will, maybe because the way in which Indians are performing, the way in which Indians' exports have gone up now, and especially the choices that the world has, right? I think the India is the very obvious choice for most of them, both in terms of quality, the engineering, the skills, and probably the kind of reskilling that is getting done now, the new technologies that are coming. I think India will be the best place and best opportunity land for both manufacturing and services. And we must make use of that demographic dividend that all politicians talk about. But if we don't take that advantage, then the same demographic dividend can be a time bomb. So we have to ensure that that doesn't happen. So only politicians can screw it. Oh yeah. No, I'm not worried about elections. Elections, I'm happy because a lot of money comes into the market. Okay? 500 seats, 4 candidates, a crore each. Calculate. If so much of money comes, I think the purchasing power of Indian masses go up. Okay, I'm on a Shoppers Stop board, we love that. Right? Retailers, all retailers love it. All manufacturers love it. So elections is a good for economy. And see, today the economy is in such a stage that it is non-reversible. What we did in 91, 92, I think is continuing. Yes, sir.
Hello. Sir, you have already explained the importance of audit system and credit rating system. What I also observed during the lifetime, the audit system is no doubt, on paper it is excellent, but it is not working very strictly, or it is not working to the mark. And that is the major fault, because recently we have come across CGM. Whatever problems are there, people are well aware of the things. Why there is no strict things over there? Why there is no, that is one of the, this is one question. Another question, as far as the credit rating is concerned, how far it is better?
How far it is?
It should be improved, what I feel. It should be improved, what I feel.
Oh, yeah.
It is not that much useful then. It becomes a just general practice.
Yeah. So, I think second question first, I agree with you that credit rating system has to be better. And not only better in the sense that it should keep on evolving, taking into account the new technologies, new thought process, and so on and so forth. You can't apply 1980s techniques and charts and Excel sheets to find out the ratings of these companies now. Okay, because the company's business have changed, the business models have changed, and therefore rating agencies also need to change themselves, which is not happening so far. But these kind of shocks either makes them collapse and make all of us collapse, or they learn from that and become a better rating agency. Okay, what is the first question? Audit. I think my strong belief is, I mean, I'm a chartered accountant, so I cannot say that auditors are bogus. Okay, audits are needed. Okay, but again, if you see the audit report, all of them say that based on information given to us. If you see read the audit report, it says that it is based on information given to us. Now, there is a difference between audit and forensic audit. Now, forensic audit is somewhere where you get into the areas suo moto without management telling you. But that is not a standard audit. Standard audit is whatever management shows, you have to see. But you should have reason to believe that what they're showing is right and enough. Now, that is where the judgment comes. And many times, I'm repeating again, business versus profession. After a certain point, you stopped asking questions because you know there is a problem. Is that right, Mr. Palkar? Because there is a business behind it. Okay? Because law doesn't give 5 years protection to auditor. Auditor can be taken out anytime. Of course, it's not considered good. Okay? But point is that I don't believe that people don't understand. Management people are smarter, but if management decides to do a good corporate governance, okay, like when I operated my company, my motto was that first inform board. Don't hide anything from the board. Inform auditors, don't hide something. But if I'm doing something wrong, then I would like to hide that. So that is where the governance issue comes. So if management follows the governance, audit becomes easy and very transparent. But management wants to hide something, no auditor can find out, unless you get into forensic audit. And forensic audit happens when you see the problem surfaces, not every day. Yeah? So you have to keep the balance between that. But again, it goes back to the governance issue. Yes, young man.
Sir, as you said about 2008 collapse of loan and mortgage, people are still heavily dependent on loan and other mortgages.
Sorry, loan?
People are still dependent on loan.
Yes.
Nowadays. So what do you think? Will it happen again?
Will happen what?
The 2008 collapse.
Okay.
And can Indian economy overcome it?
Sure. You were born in 2008? Yeah? You remember what it was? Good. So it was a suboptimal thing, right? When the mortgages were suboptimal mortgage, and you know exactly what happened. I don't want to take more time. But what had happened, very simple example I'll give you. Suppose this house of mine is worth $100,000, okay? But me as a banker, I want to give you more loan. So what I will do, I will call that house $200,000 and give you $150,000 loan. Why? Because I want to improve my top line and my throughput line. Now your ability to pay $200,000 is never there. And your house is also $100,000. So once you stop paying, I go and sell that house, right, as a mortgage, as a lien. But what I fetch is only $100,000 or $80,000. So rest $70,000 just vanished. That is called sub-mortgage or suboptimal problem. Now that was a fraud. Okay, and not only that, it didn't stop there. All those mortgage papers, banks took and securitized them. And that securitization, based on that, they borrowed more money, and that securitized papers were taken by banks in Iceland and banks in Ireland and so on, so that collapse affected many other countries. Okay, so 2008 was on a credit risk. What has happened in SVB is a market risk. Okay, so it was a different, effect is same, banks collapsed. Okay, but effect is, the cause is different. Understood? Done?
It will be out of place to say just thank you to Mr. Deepak Ghaisas. It will be sheer a formality, so I'm not going to do that, but really a lot of learnings from your speech today. Couple of things which come to my mind is we have been stressed for last March and April by the bankers for KYC. We also learned some terms like risk-based KYC being done by the bankers for FPI. Now the time has come for us to do know your bankers, probably, the way he put it to us before putting up money. And he always told that he's not a pessimist, he's an optimist. And the kind of learnings we had, we always look upon one sentence, too big to fail. Many companies in US, even in India, we talk about SBI, ICICI, SDFC, too big to fail. Probably there are proven agencies, market participants or market intermediaries, I would say, like the rating agencies. They have proved that they have failed, but they say that, or even the big four or big six. So they fail, but they, the finally failure is in our hands because it's the public's money which is getting lost in the banking system. And when we talk about SVB, I think the kind of capitalization done by government in so many years, we already face SVB, I believe. So it's common man's money which has gone. But again, coming on a very positive note, initially he wished the Easter Sunday's greetings, and there was a lot of debate about the catastrophe and the word apocalypse. Now, in that context, it is not probably a vinash, and the Friday on which Lord Jesus was crucified is known as Good Friday, and this Sunday is known as Resurrection Sunday. So let's hope that the economy, the world gets resurrected, and we have a positive note on that. Thank you very much.
So the next program will be on the 30th of April, announcements which will be made